I think now we're entering that it's a large and liquid enough market that major institutions and then to some extent sovereigns can potentially view it as an asset that they could hold or that is of relevance to them, good or bad. There are some institutions that are like, kind of worried about it, and there are others that are like, hey, maybe this is something we can invest in now. It can be useful for us. I tend to be on the bear side of bullish, which is that I don't really give out these really grandiose price targets because I'd rather be surprised at the upside than surprised at the downside. So in the last cycle, my first target was I think we're going to hit $1 trillion in market cap. We did. That was something like 50,000 a coin or a little over. Then my view was we're probably going to hit 100K, and we didn't. And there were other people calling for 200,000 or more. So even my relatively conservative target was a little bit too high. I think we're going to hit that this cycle, hopefully much higher.
One of Lyn Alden's standout observations is how closely Bitcoin's price aligns with global liquidity indicators. Among all assets she tracks, Bitcoin demonstrates the strongest correlation with these measures. When liquidity expands, whether through central bank policies or other macroeconomic factors, Bitcoin often benefits. Conversely, when liquidity contracts, Bitcoin's price can feel the strain. This relationship informs Lyn's midterm outlook, typically spanning 12 to 18 months. She emphasizes the importance of managing expectations, particularly during periods of elevated on-chain metrics or waning liquidity. While she maintains a long-term bullish stance, her short-term outlook often leans cautious, avoiding overinflated predictions. For instance, in the last cycle, Lyn projected a $1 trillion market cap for Bitcoin, a milestone it achieved. However, her subsequent $100,000 target fell short. Her approach underscores a preference for conservative estimates, opting to be pleasantly surprised by upside potential rather than caught off guard by downside risks.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin tracks with global liquidity indicators pretty well. It's among all assets that I cover, the price is more correlated with these measures of global liquidity than any other asset that I track. So I generally have opinions around, say, 12 to 18 month price direction. There's sometimes I'm more cautious if we're looking at on-chain metrics that are pretty inflated and then kind of like liquidity is rolling over, and like I tend to be more like trying to manage expectations around what's going to happen. Whereas other times I'm quite bullish, and I'm always kind of structurally long-term bullish as part of my thesis. So I generally tend to be on the bear side of bullish, which is that I don't really give out these really grandiose price targets because I'd rather be surprised at the upside than surprised at the downside. So in the last cycle, my first target was I think we're going to hit $1 trillion in market cap. We did. That was something like 50,000 a coin or a little over. Then my view was we're probably going to hit 100K, and we didn't. And there were other people calling for 200,000 or more. So even my relatively conservative target was a little bit too high. I think we're going to hit that this cycle, hopefully much higher. But I don't really give specific price targets because it's a fairly small asset class still, and relatively small amounts of global money coming into it can shift it pretty rapidly. So I tend to have more of an opinion around price and I mean more of an opinion around direction and maybe longer term where I think it could end up, rather than it's going to hit this price by this year. I don't really try to forecast that too much. That's why I don't give price targets, because if the United States just came out and said, hey, we're going to do a strategic reserve, then that's going to affect the price compared to that not happening, or any other sizable country for that matter. Right now we have rather small countries that use it in their sovereign reserve. So El Salvador, the Kingdom of Bhutan, any number of dozens of fairly large countries, if they were to come out and do this, they're less likely to do it. But if they were, that can kind of change price forecasts. I generally view more structure that Bitcoin is kind of working its way up the monetization route. So it goes from collectible to kind of niche medium of exchange. Like, for example, when WikiLeaks lost all their payment rails back in like 2011, that was one of the first kind of tangible use cases of Bitcoin. I think it was 2010 actually, but basically it was like let's send Bitcoin if you want to donate rather than these other methods because they were shut down, and it became this like backup option. Then of course as it's it's limited by its supply cap, so it became more interesting to long-term holders and investors. And there's kind of a liquidity limit. So when Bitcoin was fairly small, where a handful of people, a handful of wealthy people, if they want to buy it, they end up moving the price. That there was liquidity limitations for what institutions could do with the asset. And so it kind of had to reach certain levels of adoption before it even gets on their radar in any serious way. And I think now we're entering that it's a large and liquid enough market that major institutions and then to some extent sovereigns can potentially view it as an asset that they could hold, or that is of relevance to them, good or bad. There are some institutions that are kind of worried about it, and there are others that are like, hey, maybe this is something we can invest in now. It can be useful for us. So I do think that it's reaching that level where it's more in the conversation now. Another thing that I kind of point out is that even though Bitcoin has had multiple cycles of highs, like higher highs and higher lows along the way, most people didn't see the early ones. And most people don't look at the logarithmic Bitcoin price chart. And so for a lot of people, Bitcoin always looks like it's in a bubble or it's a broken bubble. They kind of look at the linear price chart. They only see the last cycle or two. I think when they personally see 3 higher highs, they start to realize that this isn't going away. So the 2017 cycle was kind of the first big public awareness cycle. Then the 2020, 2021 was a second cycle that was pretty mass known, and this is the third one. This is a higher high since those it's the third kind of public cycle of getting higher highs, and I think that's relevant. I think when people see it firsthand that this is they keep ignoring it and it keeps going higher, I think people start to take it more seriously.
Lyn remains vigilant about the potential risks associated with Bitcoin centralization. As institutional players like BlackRock and MicroStrategy accumulate significant holdings, there's a concern that too much of the network's value could become concentrated in a few hands. To mitigate this risk, Lyn emphasizes the importance of ongoing innovation in the Bitcoin ecosystem. As a general partner at Ego Death Capital, she actively invests in ventures focused on improving Bitcoin's speed, privacy, and decentralization. These advancements are vital to ensuring Bitcoin remains resilient and accessible to a broad range of users.
Probably higher prices. I mentioned before that Bitcoin tends to be pretty correlated with global liquidity. I expect probably global liquidity and Bitcoin price to go up in 2025. To your prior point about Vanguard, that's where an organization or a country's culture matters, because Vanguard has long had kind of an anti-gold and anti-commodity stance. They've had the view that you should own income-producing assets like stocks and bonds. To some extent, that's serving their own book, but they've had that view more than other asset managers. So, for example, BlackRock has had, a gold ETF. They don't really have that view the way the Vanguard had. And I think what we see in 2025 and thereafter is that if you have views like that, there's consequences for it. And so it pays to be nimble, to be able to reassess your thinking and go from saying, look, maybe 5 years ago I was against Bitcoin, but I've learned more about it and now I'm for it. And now we're going to do something about it. So I think we'll probably see gradually more and more entities make those types of decisions, and then they get rewarded for that. Assuming that we're all correct about the Bitcoin bull thesis long term, they get rewarded for that by being open and changing their mind. So my view is that it is strong enough, but that is something to monitor the trends of how that goes. So the main difference in this case between Bitcoin and gold is, in addition to being scarcer, basically a long run in debasement rate of 0, it's easier to send and settle. When Germany repatriated its gold from the U.S., that was a multi-year process, and it cost millions of dollars to repatriate billions of dollars or euros worth of gold. And it's funny, they finished ahead of schedule, but ahead of schedule still took years, just because of the logistics of securely doing that and all the administrative overhead. It's kind of unbelievable to me that it took years. I don't know if that's our side, or I don't know what the specifics were for why that took so long. But basically, sending gold over long distances is inherently a slow, expensive process to do securely. And Bitcoin can do it in 10 minutes or half an hour or an hour, depending on how many blocks you want your transaction to settle under, the size of it, and what level of verification you need. And that is a multi-order of magnitude improvement over gold. There are still some scaling questions associated with it. And the way that I generally phrase it is that Bitcoin doesn't replace all banks per se. It's not as though every single person is likely going to be like this fully self-autonomous, entity, but it gives a lot of people the optionality to be if they want to be. And it's this decentralized settlement network that's kind of like Fedwire. So in the United States, we have Fedwire. It's our federal reserve settlement system, our biggest one between banks. And it sounds like a funny number, but they settle $1 quadrillion worth of value per year. So 1,000 trillions worth of gross settlement volume per year. A lot of that is for the rest of the world too, because all these, a lot of international contracts occur in dollars. So that's settling for the U.S. It's also settling indirectly for entities around the world. And the funny thing is they do it with about as many transactions per second as the Bitcoin network. So they do something like 200 million transactions per year at around $5 million for the average transaction size. And that's how they get $1 quadrillion worth of settlement. And the way that I generally view it is that Bitcoin is now a global decentralized version of that, and that we have to build layers on top of it to the extent that people want to trustlessly send value quicker and cheaper with each other. And then for some people, using banks or third parties could be helpful. Maybe it's solving a problem for them. But it would be concerning if too much of it was in the hands of very few. If it all kind of gravitated toward BlackRock, that obviously wouldn't be great. Right now, the statistics of the network show that it's still pretty dispersed among whales, among kind of large entities around the world that invested pretty early. And to the extent that more of it gets sucked into BlackRock and their custodians, or MicroStrategy and their custodians, that bids the price up pretty significantly, which then reduces their ability to keep acquiring more. So I'm pretty optimistic about its level of decentralization, but I don't think people should, rest on their laurels. I think it's a risk worth monitoring. And that's part of the reason I'm involved in the Bitcoin venture space. So I'm a general partner at Ego Death Capital, and we invest in companies that are trying to make Bitcoin faster, more private. They're providing things, whether it's Lightning technology, whether it's Chromium eCash, whether it's other solutions to help Bitcoin move around in a as decentralized and secure way as possible.
Lyn anticipates that global liquidity and Bitcoin's price will likely rise in 2025. This projection aligns with her broader thesis that Bitcoin is gradually gaining recognition as a legitimate asset class. However, she stresses the importance of adaptability, both for investors and institutions. For example, Lyn contrasts Vanguard's historically conservative stance on commodities with BlackRock's willingness to embrace Bitcoin through ETFs. She believes that organizations willing to reassess their views and adapt to new opportunities will ultimately be rewarded.
Please like and subscribe my channel.